What's going on, fellow investors? You're watching Valuation Vectors, where we chart a course to financial freedom and enduring wealth through great stock market investments. Today, we're going to talk about FedEx, great American business, been around since the 1970s. Very good logistics company. We're going to chat about briefly what the company does, investment catalysts, what we think about it going forward, and whether we think it's a great opportunity or not in the future. So with that, we'll start with a 30-second overview on what the company does. FedEx, huge company, air freight and logistics mainly. They do compete across three segments. So you have FedEx Express, which is the aircraft, you see them at the airport, next day air, things like that. It's around 50% of the business. Then you have the ground segment, which is, those are the trucks you see out and about in your neighborhood. It's about 36% of the business. And then the remainder is freight. So thinking about, those large semi-trucks you probably see on the highways, maybe doubled up. That's the remaining 10%. So spread throughout the freight ecosystem with a very large concentration on the air freight side. Some competitors in the space would be UPS, and then a few smaller air cargo competitors. With that bit out of the way, we'll chat a little bit about what the company's done here over the last handful of years and what we'd expect them to do going forward. So we see here, we got the fast graphs queued up. Take this to 19 years. You see the business has been fairly cyclical. So if you look at the orange and blue lines, that represent revenue. So you can see revenue's been somewhat cyclical. This is 2006. Revenue's been down, during the great financial crisis, revenue was down significantly. If we shorten the time frame, look at 11 years, this is kind of coming out of just coming out of the Great Recession. Look at 13. We'll call it 13. You can see the stock went from about 90 to a peak 2021 about 291. If you'd invested here and ran it out to the peak, you would have done extremely well. Now, granted, it's tough to time that investment, but in any case, the company has still performed, very well over this time. Even if you bought it here, and even looking to now, after a precipitous decline here in the last month or two, you'd still have done very well. So, with kind of the long-term history taken out of the equation, chat about what happened recently. So, the company, about a month ago now, reported that they were going to miss earnings, and they indeed did miss expected earnings by quite a large margin. The CEO also made some comments about softening economy and a number of other things that drove the stock down pretty significantly. So if we look here, stock was trading around the mid 200s, mid to low 200s in July, off a little bit of a resurgence here. So mid 200s, we're down now since they made those comments, and since everything's been reported, down around 33%, and in a very short amount of time. That gives buyers like you and me a great opportunity, because this is one of the great American logistics businesses. Long term, I think the company is going to be fine. They have some short-term demand headwinds, softening demand. They've had to cut some routes for their aircraft. But long term, this company is going to be around. It's been around since 1978. They have 700 aircraft, 16 million daily deliveries. So it's a company that's going to be around for a while, in my perspective. If we take a look here at fast graphs, we'll go to the forecasting calculators. Now, if we look at the normal multiple of this company, it's traded for around 14 times earnings. Right now, it's trading for around 8. And I think in the short term, this company could go even lower. Could be looking, somewhere in the $120, $130 range. But I think long term, and I'll preface this by saying everyone has a different definition of whether they're short term, long term, or whatnot. This channel, we focus mostly on long term investments. So if you're thinking about holding this company through 2025 and beyond, I think you have the potential to do very, very well with this, with this investment. Middle double-digit returns, double-digit rate of returns, somewhere in the $260 to $300 range is where I would expect this company to be if they meet all these analyst estimates, which is a big if, but it's highly likely. I think even if we go through a softening period here, we have a little bit of a recession, I think this company is going to do very well, going forward. A few risks on my business. It has a decent amount of debt, so about 55% long-term debt to capital, which is kind of high if you look at it in a vacuum. But if you think about what this company does, they have a lot of airplanes, a lot of other sorts of fixed equipment that is very expensive. So it's a very asset heavy business. So some people might not like that. I think it's definitely something that you can overcome, and it's something you can definitely overcome. Can become a great business down the line. So again, I think this is a temporary impairment in value. I don't think it's a permanent impairment in value. So I think we'll get back to kind of these levels. If you think about it now, we're kind of down below 2019 levels, and I think we'll come back there. And then in some time, if you're going to hold this company for 3, 4, 5 years and make it a great investment, then I think we could be, like I say, $260 to $300 range in 2025 and beyond. So I think it's a very compelling investment right now. You have the opportunity to potentially double your money here in the next 5 years or so, but you got to evaluate it and evaluate if you can deal with a little bit of volatility, because in the short term, I think the stock has the potential to go even a little bit lower than where it is now. But I think it's a very compelling buy now. So anyway, we'll cut it off there. If this was interesting to you, helpful, definitely consider subscribing to the channel. And also leave a comment, any company that you want to see evaluated. Happy to do it, and always looking for recommendations. So with that, we'll let you guys go, and looking forward to making the next one. We'll see ya.